Welcome to the Bullvine Podcast, your go-to source for inside stories, cutting-edge research, and the latest updates in the world of dairy farming. Our 90-second episode explores how dairy farmers benefit from high beef prices. So, please grab a glass of milk, sit back, and let's get started with this week's episode.
Are you ready to deal with the unpredictable changes in the price of beef? Recently, the price of live cattle went over $190 for Segwit, which is a level that has only been reached a few times since 2024. This economic trend significantly affects dairy farmers who breed their cows with beef bulls to make crossbred calves valuable assets. In addition to the money that can be made immediately, this trend affects the supply of heifers and the interest rates on loans based on the asset's value. These changes show how important it is for dairy businesses to change their plans as the markets change. Find out why these price changes are significant and what they mean for the future of dairy businesses.
Recently, beef prices have been higher than ever before. This is primarily because of a lack of supply and strong demand. According to the industry's most industry data, prices in the area have reached an all-time high, almost reaching the critical mark of $190 per hundredweight, a level only seen 5 times this year. The supply side is currently limited because of a long period of herd liquidation. This trend is a direct result of the previous drought, which forced cattle farmers to reduce their herds, which meant fewer animals were available for slaughter. Recent studies show that the number of beef cows on hand has dropped to its lowest level in almost 10 years. National Cattlemen's Beef Association, 2024. This is supported by the fact that the number of cows has dropped 89% from its peak. Because of the lack of supply, prices have gone through the roof, a fundamental economic principle called supply and demand. From the demand side, the situation is extreme. People are still hungry for beef, which is helped by higher incomes and a renewed interest in protein-rich foods. In the United States alone, people have eaten about 2% more beef per person over the past year, showing a steady growth trend, Economic Research Service USDA 2024. Also, international demand has been significant. Even though supply has decreased, exports have increased because key markets like Japan and South Korea still prefer U.S. beef for its quality and safety. According to expert studies, these trends will likely continue in the next few to 5 years. Currently, it's a seller's market, a term used to describe a market where the demand exceeds the supply, giving sellers an advantage. Since fewer cattle are coming to market, prices are staying the same. However, if demand continues to rise, they could go up. This situation creates unique operational challenges and lucrative chances for people involved in beef production and related fields. As the market changes, producers and observers stay alert, navigating a world where supplies are limited and consumer demand is always high.
The interplay between dairy farming and the beef industry has evolved into an intelligent financial strategy for many astute dairy producers. As they pivot towards breeding their dairy cows with beef bulls, this strategic shift, which involves a calculated response to capitalize on the robust beef market, is more than an experiment. It's a well-thought-out business move. Farmers are increasingly seeing the economic advantages of this practice, as reflected by the noteworthy calf prices. Consider this: calf prices at the New Holland livestock auction have significantly increased. A crossbred beef bull calf now fetches $810 and $910 per head, while a Holstein bull calf is priced at $550 to $650. To put this into perspective, these prices represent an increase of $250 per head compared to the previous year. This significant uptick underscores the burgeoning profitability of crossbreeding strategies. For dairy producers, the economics are compelling. Crossbred calves demand fewer resources than replacement heifers, which require extensive feeding, housing, and veterinary care over 2 years before joining the milking herd. In 2023, these hybrid sales emerged as vital contributors to non-milk income for many dairies. Reports from industry analysts highlight a more than 10% increase in revenue from non-milk avenues in pivotal dairy states like California, Texas, and New Mexico between 2022 and 2023. This financial boon often translated into an additional income exceeding $1 per hundredweight of milk production. This strategic maneuver boosts immediate cash flows and fortifies balance sheets. With calf values continuing to rise, the decision to breed dairy cows with beef bulls positions producers to leverage market conditions effectively, providing a buffer and potential growth amidst the volatile landscape of agricultural economics.
The growing beef market presents many business opportunities, instilling a renewed sense of profitability among dairy farmers. The additional income from beef calves alleviates financial pressures and reshapes the economic landscape of dairy farming. This supplementary income source is gaining significance as regular milk prices fluctuate and costs escalate. Dairy farmers in California, Texas, and New Mexico are reaping substantial profits by incorporating beef cattle genetics into their operations, paving the way for a promising future. One compelling example is California, where dairy farms traditionally grappling with financial challenges due to high costs and regulations are now experiencing a financial upturn courtesy of beef calf sales. Industry data reveals that these additional earnings have surpassed expectations, significantly covering non-milk-related costs in their budgets. A similar trend is observed in Texas and New Mexico, where beef calf sales are reported to boost non-milk income streams by more than 10% annually. This is a testament to the strategic economic shift reshaping the dairy industry, inspiring others to follow suit. These states show how using crossbred calves for beef can improve cash flow and make it easier to manage cash flow. For example, Texas dairy farms have benefited directly from having more cash, allowing them to invest more in farm infrastructure. These farms have also been able to invest in new technologies like automated milking systems because they are making more money. These technologies will help them be more efficient and productive in the long run. The dairy industry's strategic shift toward crossbreeding isn't just a short-term way to make more money. It's a long-term model changing how profits are made.
While dairy producers are capitalizing on the beef market surge, there are critical considerations regarding long-term sustainability. The shift towards breeding beef calves reduces the number of heifer calves available, contributing to the current shortage of replacement heifers. Consequently, the costs for these animals have escalated, posing significant financial challenges for operations reliant on expanding or sustaining their milking herd. When the supply of heifers is tight, prices can skyrocket. Higher costs for replacement heifers are problematic because they increase production costs, argues a leading dairy economist. This reality could eventually erode the economic advantage crossbreeding for beef currently provides. Moreover, the strategy leans heavily on the assumption that beef prices will remain buoyant. However, unforeseen market fluctuations driven by changes in consumer demand, international trade policies, or global economic downturns could weaken this assumption, leaving operations financially exposed. Reduced genetic diversity from continued use of beef sires may impact herd resilience, affecting milk yield and animal health in the long term. Dairy farmers must carefully consider their genetic management strategies. Diversification might be key to mitigating risks, ensuring the sustainability of their herds, and keeping a stake in the lucrative beef market.
The sustained rise in dairy cow values alongside young stock prices extends far beyond the immediate gains from calf sales. As dairy cow values climb, producers are experiencing a favorable shift in their farm balance sheets. This change results in a more robust financial foundation through increased asset valuations. The enhanced worth of dairy cows translates into a more significant overall net worth for farmers, which bankers and financial institutions closely evaluate when assessing creditworthiness and determining lending rates. Higher cow values benefit dairy farmers when negotiating terms with lenders. The increased valuation acts as improved collateral, offering farmers better capital access. This access is crucial for financing various farm operations, including expansion plans or technological upgrades, often necessary to maintain competitiveness in a dynamic agricultural landscape. A solid balance sheet also instills confidence among stakeholders, including investors and potential partners, presenting attractive investment opportunities. Consequently, This enhanced financial position gives dairy farmers the leverage necessary to navigate market fluctuations more effectively, ensuring sustainability and growth in an industry subject to frequent economic cycles. Thus, the amplified values of dairy cows not only elevate direct profits, but also fortify the long-term financial health and resilience of dairy operations.
The story of rising beef prices goes far beyond the immediate sale of calves. It weaves through the complicated web of farm economics and capital valuation. The rise in the prices of hybrid calves has had a noticeable effect on the values of dairy cows. This change results from market forces and a significant shift in how dairy farms make money. If the value of a dairy cow goes up, it means that other assets on the farm are also worth more. This is good for dairy farmers in several short-term and long-term ways. To begin, higher cow values raise the value of a farm's assets. In terms of money, this increase strengthens the farm's equity, which results in a stronger balance sheet. A farmer's relationship with banks can be significantly affected by how strong their balance sheet is. As part of their risk assessment process, lenders often look at the value of real estate. Because of this, higher asset values make better collateral and may make lenders see the farm as less of a risk. This increase in collateral can lead to better terms for borrowing money. Farmers may get better loan terms, like lower interest rates or longer terms for paying them back. Access to more credit facilities is also a real benefit because it gives farmers the cash to invest in projects that improve their farms or help them grow. In a world where getting capital is always challenging, the rising value of dairy assets opens up new opportunities to drive innovation and long-term growth in the dairy sector. Ultimately, the rising value of dairy cows is integral to a farmer's overall financial plan. It shows how important it is for the dairy industry to manage its assets, especially when the market is unstable. This dynamic protects farmers from possible downturns and gives them the power to make strategic decisions with an eye toward the future, making their businesses more financially stable.
Economic, environmental, and technological factors will likely change the beef and dairy markets in the coming years. The limited supply drives the beef price, which could continue if the number of heifers stays low. This lack of supply will only go away for a while, which means that the beef and dairy markets could keep prices high. But predicting future economic conditions isn't always easy. Feed costs, changes in consumer demand, and possible policy changes about animal welfare and sustainable farming could all significantly affect the markets. As we look to the future, the continued demand for crossbred beef calves gives dairy farmers a chance to make more money. But there is a risk in this. As dairy farms focus more on genetics that make beef, they must also be ready for changes in market demand, which could be caused by new consumer trends that favor lab-grown or plant-based proteins. Having a strategy that can be changed as needed is very important. This means incorporating new breeding technologies while keeping business models flexible so that they can change if needed. Environmental concerns and the growing focus on eco-friendly methods will likely significantly impact the industry. More efficient farming methods are likely needed because of issues like water use, greenhouse gas emissions, and land management. Adopting cutting-edge technologies like genetic engineering and precision agriculture could be very important for increasing productivity while reducing environmental damage. So dairy farmers and beef producers should consider expanding their businesses, investing money into environmentally friendly methods, and keeping up with new technologies. Making decisions based on data and building strong market alliances could be the keys to successfully navigating the unknowns of the future. Ultimately, who does best will depend on how well they can use new ideas while managing their resources, ensuring their businesses stay open and grow in this changing world.
The study shows that dairy farmers have a dynamic and likely profitable chance to profit, while beef prices are high because fewer beef cattle are available. Producers who want to profit have smartly switched to strategic crossbreeding, taking advantage of higher prices for beef genetics to boost income and asset values on their farms. However, these gains mean fewer heifer calves are available, which drives up the cost of replacements and makes it take longer for heifer numbers to recover. Farmers must balance the short-term financial benefits with the possible long-term effects on their businesses. Their current choices could change how their businesses make money for years. As dairy farmers struggle through this challenging but profitable terrain, now is the time to rethink and adapt their strategies to capitalize on the changing market. Do you produce dairy products? Are you ready to adapt to meet these new needs while protecting the future of your business?
Thank you for tuning in to the Bovine Podcast. We hope you enjoyed today's insightful discussion. Don't forget to subscribe, share, and leave a review. Catch you next time on the Bovine Podcast, where bovine expertise and community come together.